You want to hear something scary? Last year, the IRS received a huge budget increase to combat tax evasion, including a plan to hire more than 87,000 tax agents. Their number one target? You guessed it, crypto. Before we jump in, it's really important to note that tax rules are constantly changing. We do our best to keep up to date with the latest guidance. This video is general information only and is not tax advice. Please speak to a qualified professional if you are looking for tax advice. Most of you are probably wondering, is Bitcoin traceable by the IRS? And the answer is a resounding yes. Bitcoin and all cryptocurrencies are most definitely traceable. So here's what you need to know. Blockchain transactions are recorded on a public distributed ledger. This makes all transactions open to the public and any interested government agency. Centralized crypto exchanges share customer data, including wallet addresses and personal information, with the IRS and other agencies. The IRS has dedicated agents trained to connect wallet addresses to users. So how is crypto traceable? For many investors, the appeal of crypto comes down to the anonymity. After all, cryptocurrencies are often touted as decentralized, anonymous, untraceable, and tamper-proof assets. But it's not really quite that simple. Bitcoin and other cryptocurrencies are built using blockchain technology. One of the key tenets of blockchain technology is transparency, which is upheld by the public digital ledger. Anyone can access these ledgers and view any transactions on the blockchain. Moreover, all transactions are permanently stored on the ledger. So any interested party like the IRS can use Transaction ID and Blockchain Explorer to find corresponding wallet addresses, or vice versa to see what transactions a given wallet has made. Interested parties can include any government agencies, the IRS, the FBI, and more. Of course, there's still a sense of anonymity. After all, your wallet address doesn't include any of your personal details. Or does it? Linking your wallet addresses to you is becoming increasingly easy for the IRS and other agencies, in part due to the pressure crypto exchanges have faced from the US government to collect and share customer data. Only recently, the IRS was granted a huge budget increase in order to tackle tax evasion. More than 87,000 agents were hired to enforce tax compliance, and crypto was singled out as the key focus for these agents. So, do all crypto exchanges report to the IRS? We know that a bunch of the big ones do. The likes of Coinbase, Binance, Kraken, and many others have confirmed they report to the IRS. That's because they really don't have a choice. Back in 2016, the IRS won a John Doe summons against Coinbase. A John Doe summons compels a given exchange to share user data with the IRS so it can be used to identify and audit taxpayers, as well as prosecute those evading taxes. Since 2016, the IRS has issued similar summons against both Kraken and Poloniex. In 2023, the IRS once again filed a court document seeking permission to enforce a summons for information against Kraken. So what do I need to report from my crypto activities to the IRS? The IRS wants to know a lot of information about your crypto assets. So here are all the things you'll need to report. The date of each transaction, your cost basis or the fair market value of your crypto in USD the day you acquired it, the fair market value of your crypto in USD the day you disposed of it, the capital gain or loss you made from each transaction, what the transaction was and the parties involved, receipts of purchase and sale, records of transfers and transactions from all your crypto wallets and exchanges. You'll need to report all this on Form 8949 and Schedule D, as well as any crypto income on Schedule 1 as a part of your annual tax return by April 15th each year. You can learn more about reporting your crypto taxes in our complete US crypto tax guide. And here's how Coinly Crypto Tax Calculator can help. That's a lot of information you have to report to the IRS, and we get it. Crypto taxes are time consuming. That's why we made Coinly Crypto Tax Calculator. We make it easy to get your crypto taxes done in no time at all and ensure you remain tax compliant. All you need to do with Coinly is sync all your crypto exchanges, wallets, and blockchains you use using API or by importing a CSV file of your transaction history. Once you've done that, Coinly will calculate your capital gains, losses, income, expenses, and more, and fetch your crypto tax report ready for you to download. For US investors, Coinly can generate a pre-filled Form 8949 and Schedule D, the complete tax report, and a variety of tax reports for tax apps like TurboTax and TaxAct. What happens if you forgot cryptocurrencies on your taxes? What do? Whether you forgot, if the IRS believes you've committed tax fraud, there is no limit how far back they can audit you. Fortunately, you have a couple of routes available to you to avoid crypto tax evasion penalties. The best thing to do in this scenario is to amend your tax return for the years you forgot to report crypto. You have 3 years from the date you originally filed to file an amended return. The IRS is far more likely to be lenient to those who make the effort to go back and correct their taxes. To amend your tax return, you'll need to file an IRS Form 1040X, but don't worry, you won't need to file all your taxes again, only the missing information. Alternatively, if you've deliberately underreported or avoided reporting crypto on your taxes altogether, the IRS just updated Form 14457 to include a section on reporting virtual currency. This form is a voluntary disclosure application that allows taxpayers who may be facing criminal prosecution for violation of tax laws voluntarily disclose information to the IRS they previously failed to disclose. By filling this form, you agree to comply with the IRS and pay back any due taxes. Okay, we understand this is an extremely complex topic with lots of details we just don't have time for in this YouTube video. For a detailed guide, please check the link down below. We hope that you find this video useful, and if you did, consider dropping a like and subscribing for more crypto content, and I'll see you in the next one.